Hello, 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 everyone. Y'all come on in. Come on in. It's Simone Kason. It's your cash counselor, your money problem solver, the dopest chick on your timeline. Why? Because I'm usually talking about money, stocks, and weed. So, y'all, today ain't no different. Today, I'm going to be talking about probably this is the most asked question that I get, right? So I get this question more than anything, especially from like beginner investors. So if you're a beginner investor, this is a great thing for you. And my big question is, how much do I need to start investing? And I think everybody, I don't know, everybody asks me that all the time. So if you like this video, do me a favor, do yourself a favor, hit subscribe so that you can know when I'm coming on, right? That's really important. And then also stay tuned and watch the next following video because it's going to give you a little bit more information about what we're talking about. So again, of course, you guys know that this is not specific information. This it's general tips and tools, but these are going to be keys that you can be able to use so that you can determine for yourself what's best for you. Now, understand, how much do I need to start investing is like a relative type question, right? It changes from person to person, but there are some things that you can do to be able to figure out what's going to be best for you and work for you. And I'm going to help you up along the way. All right, so let's kick it. So now we got Google and God, right? And so God and Google, and I tell you guys this all the time, meaning that we have the internet, we're able to do so much. And just as we can pick up our phone and hit an app and order food, what else can we do? We can, grab curbside. There's so many that we can schedule our banking. Everything that we can do with technology is at our fingertips. Well, investing is no different. Investing is no different. Yes. So now being an investor or being able to trade has become super, super easy. So let's fast forward, 10, 20 years ago. You had to have a brokerage account, and then at that point in time, 10 years ago, you would have not only a brokerage account, but you have an advisor, and you would have to pay a commission. Well, now since Robinhood and the apps have come in, most commissions are gone. And so financial advisors, unless you're having really, really large sums of money, you can really kind of do it yourself. You can make the decisions for your own portfolio. But with that being said, you have to be able to have some keys to success. And part of that I think is definitely going to be about you utilizing really, really great habits and being able to kind of stay in the game, right? So couple things that you can be able to do. One, let's talk about the platforms. First thing is that if you are not really somebody that wants to kind of learn about the stock market, doesn't really want to do their thing, then they're what we call robo-advisors. You can Google that. They're going to pretty much ask you some questions: your name, your age, how much you're looking to get in, what is it your objective, what's your time frame, and then they'll kind of come up with a portfolio that meets that kind of meets what you're looking for. And that's like a robo-advisor. So it's a computer generated portfolio. You put your money in and they kind of allocate it for you. Other one is going to be that you have like stock trader and trackers that are out there that are totally free, right? So you can kind of get in the game and learn more about companies, learn about their trending and all that other stuff, and it'll shoot you information. The other thing is that you also have online brokerage accounts. So your Fidelities and all that other stuff, everything is right there at your fingertips so that you can be able to see what you're investing in and everything else. But with all that being said, you're probably like, okay, well, Simone, how do we get there? And then what's the best way and how much money do I need? Well, bigger than understanding how much money you're going to need to be investing, I don't care if you invest $2, 2 cents, or $2 million. If you don't have best practices and good habits, you're going to lose your shirt. You're not going to make it. It's not going to work out the way that you plan. So first things first, if you're doing with a smaller account, one of the things that I want you to consider is invest on the regular basis. Usually we call this dollar cost averaging. What does this mean? This means that you're going to invest money in regular intervals. Understand, your portfolio is going to go up and down, and it's going to what we consider rebalance. With that being said, you need to understand that by putting in regular amounts of money into a portfolio, in most of the cases, you end up paying cheaper amounts for the stocks on the average. And in addition to that, it's a wonderful way for you to be able to slowly increase how much you invest without freaking yourself out, right? Next thing is make sure that you research the companies before you buy. A lot of times we hear on the street or we hear from a friend that this company is good and this company is bad. Well, one of the things that you want to do is you want to make sure that you're researching the company, that you're not just following a trend, because that's going to be our next one, but making sure that you're getting into solid companies. One of the things that could be very disheartening when you are a new investor is for you to put your money in and in 90 days lose about 50%. And I'm going to tell you something. Most of the people that actually go in and take our courses, that's what happened to them. So be careful. Other thing, number 3 is look for solid trends. So none of us have a crystal ball. Nobody knows what the market is going to do tomorrow or even in the next 5 minutes, right? But what we do know is that we can look for trends of going up or going down. So if you see a steady trend of it going down, that may not, if you are a new beginning investor, that might not be the best time for you to get in. Might kind of hurt your ego and hurt your pride and hurt your wallet if you get in and you immediately lose a lot of money. So look for trends where they are going up. Look for companies that are on an upward trend, even in the market, so that you can feel more comfortable as a beginner. You know, nothing beats a win but another win, right? And then never invest more than you are willing to lose. Understand there is always a risk and reward factor, right? So for everything that you can gain, you can also lose. Never put in money that you need to pay bills or you need to be able to utilize immediately. So while you're thinking about this, you probably say, well, Simone, how do I get the money that I want to use to invest? A couple things that you can do. One, get rid of that morning $5 coffee that you're getting every week. You know, maybe that could be able to be put into a jar or an account that you can save up to build up to start investing. Or maybe cut out on a couple of those lunch dates and dinner dates. You may be able to put a few dollars back into your pocket, back into your wallet, and save them so that you can start investing. And then last but not least, it might be one of those activities like shopping online. You might not necessarily need that new thingamabob or whatever that you're buying off of Amazon. You might be able to take that money and use it instead to purchase. Instead of buying something on Amazon, you can buy shares of Amazon. And we'll talk about that in a little bit. All right. So we got all of that out the way. So make sure, understand that you can actually open up some of these accounts with as little as $1. But you got to remember, how much you put in is going to be how much you put in is going to be how much you risk, but how much you could possibly be rewarded. So the bigger the accounts that you can use, or the more money you can put in, the bigger the reward. But in most cases, a lot of the experts will say about $500 to $1,000 would be a minimum, right? So if you're looking at that though, you got to understand that if 10% of $10 is $1, but 10% of $100 is $10. So of course, as we said, the more that you're able to invest, that is the more that you're risking, but it's also more that you will be able to receive a reward on. So keep that in mind. Now, more importantly than the amount of money that you put in immediately is going to be adopting a strategy to get stocks that meet your objective. That's so important. So if you're looking for income and you're trying to create another income, then dividend stocks would be a great way for you to be able to look at them. Those are strong companies that issue out a check every quarter, every 6 months, once a year. So those are going to be those strong companies. If you're looking for a long-term growth and you're looking to be a little bit more riskier and you don't mind rolling the dice, then growth stocks might be where you want to go. Those are going to be those smaller companies that we believe will become the next Netflix or the next Amazon. And then last but not least, you can always look at value stocks. Those are going to be those strong, strong companies. But because of something that happened in the news or whatever happened in the market, you were able to purchase them on sale. And so you're looking at really getting that compounded interest. So all of those things are going to be imperative for you to be able to consider how much money you need to invest. Now, there are 3 keys to this that you gotta have, and I know you're like, okay, what else do I need? These 3 keys. First thing I want you to remember is diversification, diversification, diversification. See, now that you can purchase fractional shares, then you can have a lot of diversification with a small account, meaning that while Amazon is trading at about the $2,000, because you may be able to have an app that will allow you to purchase a fraction of a share for whatever amount that you're putting in, then you can be able to use smaller amounts to open up your wallet and open up your portfolio. So you might have a little bit of Amazon, a little bit of Tesla, a little bit of Apple. So this allows you as an investor, a retail investor with a small account, to be able to have a little bit of everything, right? Instead of putting it all in one place because you got such a small account. You can only buy like that one. I only got $100. I can only buy one stock that's at $92. No, you can take that $100 and buy a little piece of this, a little piece of that, a little piece of that. That brings us to number 2 is asset allocation. When you are starting, you don't want to have 20, 30 different stocks that you got to keep up with. That's way too much, and that's mind-boggling. You want to keep your stock portfolio under 6, right? So under 6 or under different companies, and you don't want to have more than 5 to 20% in any one company, right? So you want to make sure that you kind of divvy it up, give a little bit here, give a little bit there, and be able to watch those and really study the trends and learn what your portfolio is doing. If you don't watch your money, won't nobody else watch your money? Or they will, but you don't want them to. And then last but not least is your risk appetite. How much, and that's your risk tolerance and your risk capital. How much can you take? See, the stock market is volatile. It goes up and down, up and down. Can you deal with the up and down? So when you're looking at this, are you okay with getting into companies that's going to give you a lot of up and down and push? And then last but not least, your risk capital. How much money are you okay with losing? Meaning that how much can you invest? You don't want to ever invest money that you're going to need in the very near future. If you're short-term investing, we're usually looking at 3 to 7 years, right? If you're doing long-term, of course, that's going to be, up to 10 years. So you want to know, how long are you going to stay in this company? Or not only that, how much time do you have before you need this money? The last thing that you want to do is have a car incident, like your car breakdown, and you have to sell your stocks at the wrong time. All right, so if you like this video, make sure you do me a favor, hit subscribe, and then stay on, because guess what? The next video is all about dividend investing. Remember I mentioned that before, and I was talking about how getting an income? I'm going to tell you the ins and outs about dividend investment. Okay, of course, it's Simone K-Sign, your cash counselor, your money problem solver, the dopest chick on your timeline. Why? Because I'm usually talking about money stocks a week. Y'all, today that thing ain't hitting no different. Of course, everybody, I have to tell you, because I mean it with all my heart, I love you guys like I love myself.